Welcome back to another episode of College Cash Corner, the podcast where we dive into finance. For today's episode, we will be talking about financial advisors. I'm your host, Tara, and joining me today are Natalia and Victor. When people start to talk about investing, they have to decide whether or not they will be using a financial advisor or if they're going to manage their own type of investments. So, Victor, can you start us off with talking about what is a financial advisor?
Sure thing. There are different types of advisors that are trained professionally who can guide you to various aspects of personal finance, such as budgeting, investing, and retirement planning. They have the knowledge and experience to help individuals make informed decisions.
I would assume that there's probably some pros and cons to using a financial advisor versus doing investments and financial planning on our own. Could you tell us what some of those pros and cons might be?
For sure. So, some pros of an FA, also known as a financial advisor, they have a deep understanding of the concepts you are asking about, and you don't have to know all of the information since they should be trained to do that. But some cons that could come up with an FA is that one potential drawback is the cost. Another con is the potential for conflicts of interest. Some financial advisors may receive commissions or incentives from certain financial products they recommend.
There are different types of financial advisors. Natalia, can you tell us types that we're going to talk about today?
Sure. So there is fiduciary financial advisors, investment advisors, financial planners, insurance advisors, and robo-advisors.
And I do want to point out that sometimes you can have one person and be more than one of these types of advisors. All right, so let's talk about a fiduciary advisor. But what does that mean if you are working with a fiduciary advisor?
Yeah, a fiduciary advisor, someone who is legally required to prioritize their client's interests above their own. So they have a duty to provide unbiased and objective advice, letting the client know of any potential conflicts of interest. This fiduciary duty ensures that the advisor acts in a trustworthy and transparent manner, putting their client's financial well-being first and not them.
Hopefully, every time you work with an advisor, they are a fiduciary advisor. What's another kind of advisor we might work with?
Another advisor you might have help with is an investment advisor, someone who focuses on managing investment portfolios. They provide guidance on selecting and managing investments based on the client's goals and risk tolerance.
Then we also talked about a financial advisor.
These advisors take a more holistic approach, meaning to provide support that looks at the whole person, considering various aspects such as an individual financial life, to help with budgeting, retirement planning, tax strategies, estate plannings, and more.
Then what about insurance advisors?
So this is pretty simple. It's someone who specializes in helping individuals choosing the right insurance policies to protect against risk or uncertainty.
Also, robo-advisors were mentioned. What is that?
It will be someone who use algorithms and automatizations to provide investment advice and portfolio management at a low cost. They are often more accessible and a more accessible option for those with smaller investment amounts.
So we need to talk about how these different advisors are paid because there are multiple ways that they can be paid. The first one is probably the most common, is called assets under management, or AUM. The advisor's fee is calculated as a percentage of the investments that their client has. Their percentage fee usually ranges from 0.5% to 2% annually of your investment portfolio value.
Can you give us an example of this?
Sure. So let's say I have $10,000 invested in my portfolio, and I'm working with an advisor who is paid by assets under management. I'm going to pretend that their annual fee is 1%. Well, 1% of $10,000 is $100. So that's how much money that advisor would be getting paid from me that year is $100 because I have $10,000 invested. Now, that amount can go up quickly, right? Because let's say one year let's say I stay with this person, right? They continue to charge me 1% annually. And eventually my investments get up to $1 million. Well, 1% of $1 million is $10,000. So of my investments, they will be paid $10,000 for that year because they are managing $1 million portfolio for me. And then as my investments go up, right, then they are going to make more money each year from me. So that's how assets under management works. And that fee is separate than the investment fees. All types of investments that you choose or your advisor chooses on your behalf also have fees. So that assets under management is only the advisor's fees. Point blank, ask them questions. What percent are they making? And if they don't really want to answer, you'll have to decide, is that someone that you want to work with? Your questions should be answered since it is your money that they are working with.
Okay, but I guess there are many other ways how they get paid, or are all just based on percentage?
Right. No, there are other ways that advice can be paid. So some financial advisors charge an hourly fee. Those who charge an hourly rate typically bill their clients based on the actual time spent working on their financial matters. The hourly rate can vary depending on factors such as the advisor's experience, their location, and the complexity of the services required. On average, hourly rates range from $100 per hour to $400 per hour. That can also vary significantly as well. Some advisors have a minimum number of hours for their services, while others may offer tiered pricing based on the complexity of the advice or the services that they're providing. So you may have a financial advisor who charges $100 per hour, but when you sign up with me, it's a minimum of 3 hours that you're paying for. So that would be a $300 cost for their advice. There's another way that advisors might get paid, which is a flat fee. Financial advisor might say, to work with me, I charge a flat fee of $2,000. I'm going to go through all of your information and then I'm going to give you advice based on what I see of your financial situation. Typically, flat fees range from $1,000 to $3,000. And in some cases, advisors might offer a tiered fee structure where different levels of service are available at different flat fee amounts. And in fact, some may have a flat fee or an hourly fee, but then also charge a retaining fee. So for the year, you might pay a certain amount of money just to keep them as your advisor. And then when you need their services, you pay by the hour or you give them a different flat fee for the services for that year. And then finally, there are things called robo-advisors, which are becoming more popular. A robo-advisor is a person that you would talk to. It's not necessarily a computer. They are taking your information, putting it into an algorithm or into a database, and then looking at that information that they're given back, and that's how they're advising you. A robo-advisor's fees are typically range from 1/4% to maybe 0.5% of the assets under management. So if you have $10,000 of assets and you're working with a robo-advisor and they're charging you 0.25%, you would pay them $25 that year for their services. But they're just putting it into a formula and telling you what that formula is telling them based on your situation, giving advice that way. It's worth considering that the fees charged by robo-advisors typically cover investment management and automated portfolio rebalancing. Additional financial planning services such as personalized advice or consultations may involve separate fees as well. One of the other things can go for all types of advisors. Something that we want our listeners to understand is that the three of us are not financial advisors. Can you explain what I mean by that?
Yes. So for us, we are financial literacy mentors, not financial advisors. Financial advisors are professionals who provide comprehensive financial advice and services based on an individual's specific financial goals and circumstances for a fee. And they often specialize knowledge in areas such as investment management, retirements, or anything having to do with finance in general and making profits for you and him. Now, for us, financial literacy mentors, we focus on educating and empowering individuals to make informed financial decisions. We provide guidance and resources to help improve financial literacy skills such as budgeting, debit management, saving strategies, and basic investment knowledge. We can help equip individuals with the knowledge and skills needed to navigate personal finance efficiently, and our support is free.
All right, so that makes sense. We can tell them about the types of investments, but we can't say what types of investments they should pick.
Yeah.
Yeah. And we always act as a fiduciary financial mentor. Before we go, we want to emphasize that the financial literacy team is here to provide support and guidance to MCC students on their journey to improving and maintaining their financial knowledge. You can find us on MCC's financial aid website by clicking on the financial literacy section on the left side. There you can schedule a one-on-one appointment with us, access a free cash course account, stay informed about upcoming workshops and events, and explore additional financial resources that are available. Until we meet again, remember to be mindful and make wise decisions when it comes to your finances. And that's a wrap for today's episode of Triple C. And take care.